How to read Level 2 data, 3 essential skills for new traders. Welcome to this beginner-friendly guide on how to read Level 2 data, one of the most powerful tools available to traders. If you're new to trading, this video is designed just for you. By the end of this video, you'll feel confident in understanding the fundamentals of Level 2 data and how to use it to enhance your trading strategy. Level 2 data may seem intimidating at first, but don't worry. We'll break it down into simple, clear steps and focus on 3 essential skills that every beginner trader needs to master: interpreting the bid-ask spread, recognizing order book trends, and identifying key market players. So let's dive in and unlock the power of Level 2 inches data together. Let's start with the basics. What is Level 2 data? Level 2 data, also known as market depth, is a real-time view of the supply and demand for a specific stock. It provides detailed information about all the buy and sell orders currently placed in the market. This includes the price and volume of each order, giving traders an inside look at what's happening on the market behind the scenes. Here's what makes Level 2 data valuable. It's not just about the current price of a stock. It's about understanding what buyers and sellers are thinking. Whether prices are likely to rise, stabilize, or fall often depends on these underlying orders. By learning to read Level 2 data, you can make smarter and faster trading decisions. Level 2 data serves as a critical tool that empowers traders with deeper insights into the market. It helps you understand the balance of supply and demand, identify trends that can signal future price movements, make informed decisions about when to buy or sell a stock. For example, if you notice a surge in buy orders at a particular price level, you might interpret that as strong demand and anticipate an upward trend. On the flip side, significant sell orders may indicate potential price resistance. For beginner traders, mastering Level 2 data can provide a competitive edge, helping you navigate the market with more accuracy and confidence. To use Level 2 data effectively, you first need to understand its key components. Bid prices. These are the prices buyers are willing to pay for a stock. Ask prices. These are the prices sellers are willing to sell a stock for. Order sizes, the number of shares being bought or sold at a specific bid or ask price. These numbers are usually displayed on a bid-ask ladder, with the highest bid prices and lowest ask prices appearing at the top. This provides a snapshot of the order book, which is where all active orders are listed. Being able to read this data is fundamental to making better trading decisions. The first essential skill is understanding the bid-ask spread. The bid-ask spread is the difference between the highest bid price, the most a buyer is willing to pay, and the lowest ask price, the least a seller is willing to accept. For example, if buyers are bidding $10 per share and sellers are asking $10.05 per share, the spread is 5 cents. Why does this matter? The bid-ask spread reveals important information about liquidity. A narrow spread usually means the stock is highly liquid, making it easier to buy or sell quickly. Volatility. A wide spread often indicates the stock is less liquid and more volatile. For beginner traders, it's advisable to focus on stocks with tighter spreads to reduce trading costs and risks. The second essential skill involves identifying trends within the order book. The order book is essentially a list of all the buy orders, bids, and sell orders, asks, for a stock. These orders create patterns that can help you predict price movements. Here's how to recognize key trends. Support levels. These are areas where there are large volumes of buy orders. They indicate strong demand and tend to act as a floor, preventing the stock price from dropping further. Resistance levels. These are areas with high volumes of sell orders. They act as a ceiling, capping how high the stock price can rise. For example, if you see a cluster of large buy orders at $50, you can infer that $50 is a support level. Buyers believe the stock is undervalued at this price, which can create upward pressure. The third skill is learning how to spot dominant market participants. In every market, there are key players who can significantly influence a stock's price. These include market makers, firms or individuals who provide liquidity by actively placing buy and sell orders. Institutional investors, large entities like mutual funds or hedge funds that often make significant trades. Whales, individual traders or entities with substantial financial resources. One way to identify these players is by observing unusually large order sizes. For example, if a single buy order appears for 50,000 shares while most orders are for 100, 500 shares, chances are it came from an institutional trader or market maker. Pay attention to these players. They often signal the next big move in a stock's price. So how can you apply level 2 data in your trading? Here are a few practical ways. Plan your entry and exit points by observing support and resistance levels. Use bid-ask spreads to determine whether a stock is suitable for quick trades. Watch for large orders to anticipate significant price movements. For example, if a stock's price is approaching a strong resistance level with a high volume of sell orders, you might decide to sell before a potential price reversal. As a beginner, it's easy to fall into a few traps when interpreting level 2 data. Here's what to watch out for. Overanalyzing. Don't get bogged down in every small movement in the order book. It's important to consider the broader market context. Ignoring external factors, news events, earnings reports, and broader market trends can all impact prices, regardless of what level 2 data shows. Assuming all orders are real. Some traders use fake orders to manipulate the market. It's called spoofing, and it can throw off your analysis if you're not cautious. Staying aware of these pitfalls will save you time, money, and unnecessary stress. Let's walk through an example to solidify your understanding. Imagine a stock is trading at $20. You look at the level 2 data and see buy orders. $19.95, 2,000 shares. $19.90, 1,500 shares. Sell orders. $20.05, 2,500 shares. $20.10, 3,000 shares. From this, you can infer the following. The bid-ask spread is 10 cents, indicating moderate liquidity. There's a strong resistance level at $20.05, making it a challenging point for the stock to break through. There's decent support at $19.95, suggesting buyers see value at this level. With this information, you might decide to buy at $19.95, anticipating support, or wait to see if the resistance at $20.05 is broken. To get started, you'll need a platform that provides access to level 2 data. Many online brokers and financial platforms offer this feature. Here are a few tips. Look for platforms that provide real-time data. Consider whether you want a free or paid platform. Paid options often offer more features. Ensure the interface is beginner-friendly. Some popular platforms include Thinkorswim, TradeStation, and Webull. Level 2 data becomes even more powerful when combined with technical analysis. You can use charts, indicators, and historical trends, along with level 2 data, to make well-rounded decisions. For instance, if a stock is nearing a historical resistance level on a chart and there's strong sell pressure in the level 2 data, you may decide it's not a good time to buy. In this video, we introduced you to level 2 data and its 3 essential skills for new traders: interpreting the bid-ask spread, recognizing order book trends, and identifying key market players. We also addressed common mistakes to avoid and practical tips to use this tool effectively. Remember, trading isn't about perfection, it's about making informed decisions. Mastering level 2 data will take time, but with consistent practice, it can significantly enhance your trading skills. Thank you for joining us. If you found this guide helpful, don't forget to like, share, and subscribe for more educational content like this. Stay tuned for our next video, where we'll explore even more tools and strategies to help you succeed as a trader. Happy